Hello and welcome again on Stocks Advisor channel. In today's episode we'll talk about Roku Incorporated, traded at Nasdaq, a ticker name Roku. Well, Roku is a technology computer hardware company, but what I really like about this one, and you have probably noticed that we really choose a lot of companies with this chart situation. This is a company in correction mode ongoing, and actually secondary wave is starting here. Why do I stocks? Because they are very predictable in behavior. You exactly know what's happening there. You can very nicely simulate and you can define the entry opportunities. Why is it hard to trade with those? Because it's not usually an immediate play, but you really need to wait a little bit and you need to know what you're doing. So it's a very good patience exercise. Usually that's the major, let's say, problem and major challenge for those who trade stocks. But if you master this, it would be very nice and safe trade. So Roku is indeed a company in correction. You can see it was growing really nicely all the way from April of previous year, recovering and actually reaching the levels really incredibly higher than 460, 450 here. Plus you can see, and now we're in decline, being currently at 319.58. After hours, very slightly positive action is seen, but it's not that major. So overall, we made minus 469% today. So if you look in the magnification, you can indeed see that we are actually ongoing the correction that started from after reaching the levels of about 187. You see there were multiple attempts to pierce this, but didn't work, and finally having the dark candle kind of pseudo evening star, we actually decline with very interesting shape. So we have a clear clear resist line formed here, which is ongoing all the way from 487, and you see 2 times the price already bounced from it downwards. So let's make it red and thicker that we can use it as eye guide. So this one, we can call it R1, is a very strong resist level at the moment, and actually it's confirmed to be resist level again 2 times, and we are going next wave of decline. And speaking of this, still there is no indication that this one will be stopped. The nearest stop level that might work here is actually in the vicinity of moving average 200, because then we will see some echeloned resist levels. And overall, also what we need to keep in mind here, that void between, so the first level of course of the moving average 200, but then there is a big void between next real support levels that would be around 200. So this will be the void. If we decline there, we need to be really sitting tight and knowing what you do and buying through carefully and with big confidence actually in our analysis. Therefore, the first level to buy through and to make a quick attempt to rebound will be here. And the reason for that is because you can see this is slightly inflection point that was forming in December. And on the top here, you see this channel that worked many times as support level here. And this level between 281, let's not speak about cents because here it's not that important. So 281 and 313 is the level where we had also major rebounds there. And at the moment now the moving average 200 is here. So it's kind of a double support level. So we still might have a rebound there, but most probably at the lower part. So I would even decrease this one to 303, which will make even more sense to buy through. So this will be the first level to buy. Let's make it a call out for us. And then we can hope for first rebounds based on the support levels that we just discussed here. If this is going to happen, then we are going to rebound all the way to R1, on the vicinity of R1, because on these classically correcting channels and patterns actually, what is nice that the top resist level, the R1, the descending resist level, works both as a support and resist. As an attractor and as a resist. What does it mean? It means that when the price is in the vicinity of R1, it works as a resist, so it bounces downwards the price action, but if the price is too low, is much lower than R1, usually more than 15%, it starts working as a very strong attractor here. And you see those examples, for example, by end of March, the price indeed was attracted, and this small attraction moves as well. So you know this is an indicator, and you know how to react here, how to foresee and anticipate your price action and buying, selling. Therefore, the first would be this one, then hoping for rebounds, actually hoping for and expecting the move like this, but even then, still there is no major indication of the end of correction. So most probably we will go for a secondary corrective move. And for the secondary correcting move, still we might even pierce immediately from the current price action, but corrective move takes place, so we can continue declining. The next level to buy through would be actually here. It will be between 256 and all the way to 230, so we can write it 240, we can write it again here as a call out for us, and this would be the second level to buy based on technical expectations. So these two levels are, first, it's an immediate technical pattern. Second one is, let's say, if the first technical pattern is either neglected or it plays out with rebounds and then declines, is the second level to buy in. And the third one we always need to keep in mind to average down risks due to negative catalysts, if any, coming for the company. And that could be anything. It could be bad news, it could be a global market situation whatsoever. And the way to mitigate your risks there is actually to have funds to buy at the very principal levels. And therefore you can see those, although to be quite low here, but still these are between actually 203 and 177. You could say, wow, it's really low. Yes, it is indeed the case, but it's not that we predict the price to go there. It's what we want to do is mitigate risks if price goes there, because if any negative catalyst kicks in, we could really go low, and while others will be taking losses, you just buy in through and you prepare for really nice profit. So with this way of trading, you don't do stop loss, you don't cut loss, anything. You just say it's okay to spend a little bit extra days to buy through slowly and always be mitigated with your risks, because once you mitigate all major risks, what remains for you is taking profit. This is really interesting approach, because with this way of trading, the worse the situation gets, it's actually the better for you, because you can buy even lower with more profitability, although it might then take a little bit longer time to trade. But if you are not super fast trader, but still being actually trading daily or few days or weekly, and you are okay to wait a little bit but still exit with the profit, this is, I think, the most weighted and most calm way of trading. But of course you need to know what you're doing, you need to clearly see the levels, and you need to be confident in the analysis you do. So according to our opinion, this would be the way to trade here. Still, of other parameters interested, what is important that RSI is declining, again might go a little bit lower to oversold area. MACD just starts the negative wave, so it could go a little bit deeper, again proposing that we at least go to the first channel, but if it will make several negative waves behavior like it was in March, then actually it might be even that we go to the second level too. So this is just starting, and we will see how it will behave. Levels to buy, and with this strategy should be quite safe. And still speaking of how to buy through and how to average down, because we discussed here 3 levels, and these are 3 levels based on non-linear averaging down, meaning that we buy through with different portions. So it's a 5-portion play, meaning that the funds you would like to play here, it's advised to split in 5 portions. Then you can buy with 1 portion in the first channel. If the price declines to the second channel, you can buy with another 2 portions. This way you average down such that your current price will be closer to the lower price. So once the rebound takes place, profit and best actually return of investment. And the remaining 2 portions you just keep in case of negative catalyst kicks in. So you can safely buy there, although it will look very dramatic. The price decline would be significant, but if any, of course, not given. But if it happens, you just buy through and you just calmly wait, and you will really enjoy a very nice profit here. So this is the way to trade. It's kind of the worse the better approach, but it's very safe and I really like it. It usually works really well. This being said, these are the levels, and speaking of profit taking, again, here it's advised to take a profit at the higher levels. It will be 10 to 15%. At the lower levels, let's say, if we go the level 3, if it's activated, then actually the profit taking would be advised. The profit taking would be advised up to 20% from all funds allocated in the position. So if this is happening, if you have this profit, really take it, enjoy it, re-enter if needed, but really take it, because it's better to take profit and then take it again rather than trying to become rich from one trade. This is not possible, and major reason for traders to have bad experience in their trading history. So with this being said, this is the way to play with Roku. Very nice stock in a sense that it's very predictable. We clearly see what is happening. Of course, currently declining, so if you bought at the higher levels, I can feel your pain, but if you know how and what you do and how you play here, should be opening really and not a lot of nice opportunities. So good luck with this one, and see you at another episodes of Stocks Advisor channel.